Welcome to the Food Professor Podcast, presented by Caddle, Season 6, Episode 7. I'm Michael LeBlanc.
And I'm the Food Professor, Sylvain Charlebois.
Our very special guest for this episode is Trent Clarenbach, Special Crops and Grain Marketing Analyst, joining us from the great province of Saskatchewan, with some somewhat controversial technical analysis of the value of farmland. Sylvain, you were on a webinar with Trent. You thought he'd be a great guest, and he's got a great, interesting background, was a farmer himself, so he knows of what he speaks, but he's got a very different way of looking at the value of farmland, and it was a super interesting discussion.
Yeah, it's funny because for every year, Farm Credit Canada, our Crown Corporation, actually delivers this report about farmland value, and every year, of course, Farm Credit Canada comes out with the same message. Basically, your farm values are going up, and obviously farmers are pretty happy. And guess what? Farmers are FCC's customers, so you want to keep them as happy as possible if you have some good news. But this guy, Trent, comes in and says, you know what? Your farmland may not be worth as much as you think. So obviously, I suspect that he has received a lot of criticism, but I do think that the topic itself needed some attention, because I think as part of his argument is actually truthful, and frankly, he brought forward a really interesting technical analysis in terms of how he came up with this argument. And again, I don't want to criticize the FCC's reports, but they're so predictable, and it's often about cheerleading more than anything. And the analysis is very superficial compared to Trent's, by the way.
Well, he came in like a wrecking ball, if you're familiar with that song a little bit. So we'll get to Trent's interview a little bit later in the show, of course. I'm just back. I spent the weekend in Prince Edward County, somewhere you'd be familiar with. For the listeners across Canada, it is kind of between Toronto and Kingston. You would know it because you went to school in Kingston. I hung out with one of our guests, Dan Sullivan.
When I went to school in Kingston, Prince Edward County was not a thing. Let's be honest here.
So different. I grew
went
up
to school
in Ottawa,
in 1942.
Listen, Picton, Wellington, these were like drive-by cities, and they didn't look like they had a great future.
Pretty much.
Wow. Like the area was busy. It was a beautiful weekend, beautiful October weekend. I hung out with a prior guest of ours, Dan Sullivan, the proprietor of Rosehall Wineries. Dan was so gracious. I was there with my wife, and we sat down and chatted for a while about what's going on in the industry. I met his partner, Cam. And of course, I picked up a bottle or 10 or 12 of wine because it was so good.
Well, you don't have any borders to cross. You didn't have to drive back to Quebec, or you didn't go to Manitoba, so you were legal.
Yeah. What's going on with that? Like, there's an article I was at the Globe, or somebody was saying, hey, whatever happened to all that discussion about open borders and alcohol and all that? It seems to get, I don't know, is it hung up somewhere? What's going on?
Well, I mean, when looking at some of the premiers acting up these days, including your own premier, Doug Ford, with alcohol, I do wonder what's happening. I mean, he's dumping Crown Royal all over the place, and that bottle is manufactured out of Manitoba and bottled in Quebec, and that's going to continue no matter what. But I don't think it seems to bother Doug Ford at all. So and of course, out west, you have Premier Eby basically having a spat with Premier Smith. So it's not great. I mean, I think everything has come to a halt. And I said this on this show, the heavy lifting will have to come from premiers themselves. Ottawa can say whatever it wants, but the heavy lifting has to come from the premiers themselves. And I'm not seeing any evidence that premiers want to tackle interprovincial trade barriers anytime soon.
One last comment about Prince Edward County or Picton. I was going to rename it Charlotte Langleyville, because if you remember our guest, Charlotte Langley, everywhere I went,
she's everywhere.
She's everywhere. Everybody knows her, and her tin food, Just Cans, is everywhere. Big displays. Boy, the bespoke tin food, tin can fish movement is certainly having a moment. And Charlotte's, she's also importing.
Shout out to Charlotte. Great job.
Shout out to Charlotte. So anyway, and I picked up like about a bushel of the freshest shishito peppers I've ever had. What a great time to be there, and the harvest and the apples, and so it's fantastic. So if anybody's listening to the sound of my voice or our voices, if you have the opportunity to go to Prince Edward County for a weekend, it's a wonderful. I want to pick up on something that we didn't talk about. We kind of just ran out of time last week. We had 8 acres on, and we were talking about both organic and we were talking about grass fed, and you wanted to talk about, or you had brought up about 2 weeks ago, something around the Australians. Now, there's two parts of this story. On the one part, there's a grass-fed beef. Are they dumping grass-fed beef? Because it seems to be quite inexpensive here in Canada. On the other hand, what they give it, they take away. Apparently, they're now finally opening the borders to Canadian beef exports. So what do you know, and what do you hear?
Well, that happened in August, I believe. So there's more trades between both nations. But we are seeing more Australian beef right here in Canada because, well, our own beef is more expensive. But I spoke to a few people in Australia, and they actually saw that Canadian or Australian beef in Canada is actually cheaper than Australian beef in Australia, which really it's a bit of a head scratcher because you do wonder about two things. One, is there something going on with our own beef supply chain? And I'm pointing my finger at Cargill and GBS in particular, because it's easy to understand exactly how much money farmers will be making. You can guess how much grocers are making, but that black box in the middle, occupied by GBS and Cargill in Canada, it's hard to know exactly what's going on with margins. We know that Biden, before Trump went after beef packers, and a few of them actually wrote checks to Washington to make sure that things do quiet down. So there either something is going on with processing in Canada, or basically Australia is dumping beef into Canada. But of course, that's hard to prove. But I do wonder what's going on there. And of course, with 8 acres being on our show last week, I certainly would be concerned about that, knowing that perhaps some other countries are unfairly competing against my own product.
Now, do I have it right that at the same time the Australians are opening up their border to Canadian beef, and it's been closed for a while? Do I have that right?
That's right, yeah. And so I believe that decision was made a while ago, I think about 2 months ago. And so that's good news for sure. Now, of course, are they actually buying Canadian beef? I wouldn't, because it's too darn expensive. And and their beef is actually cheaper in Australia. So very effective. They, as you know, they've gone through some droughts, but they've been able to maneuver around the effects of droughts, whereas in Canada and the U.S., it's been the opposite. Everything is up, but our hope is the American consumer. American consumers are starting to walk away from American beef. And so when that happens, typically prices do drop, and they've started to drop finally. But again, inventories are still very low, and we're expecting inventories to remain low for quite some time, probably into 2027, if you can believe it.
Wow. Now, when you say Americans are walking away from American beef, or you said walking away from beef, it's more a taste, changing their proteins than anything else, right?
No, it's just price. It's just too pricey. Right? Yeah, it's just too pricey. And of course, the economy there is slowing down. And so people are a little bit more careful, as Canadians, a little bit more careful with their food budget. And when that happens, typically that's not good for beef.
So you mentioned earlier in the show, up in the opening, some activities from our premier here in Ontario, Doug Ford. Yes. And I wanted to say and bring something back from a couple of weeks ago. Doug giveth and Doug taketh away. So he had a hilarious press conference where he was giving a Chapman's, great Ontario ice cream manufacturer. I love their product. I enjoy it. I enjoy it very, very much. And he said, "Oh, I love these things. I have one every day before I go to bed." Anyway, they were celebrating opening a new plant. I think it makes them now the biggest Canadian ice cream maker in the country. So I think they got some bump up from the government. But Doug was back, Premier Ford was back in the news this week, saying the minute the last employee walks out of the Windsor Crown Royal plant, that's it. They're coming off the shelves. So what he giveth, he taketh away. It's a bit of a head scratcher, as you've said. I don't want to dwell on it. We've talked about it before, but these products are made in Winnipeg and they're bottled in Quebec. But he's just saying, listen, I read, he said, their response to Diageo was saying, hey, it's a tough decision. So I think he's trying to sway tough decisions with putting a thumb on the scale and say, well, if you're going to make a tough decision, here's another factor. Don't, to say, well, let's just keep it if it's on the bubble. What do you think?
Well, I'm concerned because for a couple of reasons. One, both you and I saw each other a few weeks ago. I was speaking in Brampton. I spoke about Doug Ford's position around Diageo and, of course, Crown Royal. And when I actually stepped away from the platform, from the stage, 3 people actually came to me and said, well, I had no idea Crown Royal was still going to be made in Canada. I just assumed that everything was actually moving south. So it is seen as misinformation, really. That's one thing that concerns me a whole lot. People are boycotting Crown Royal based on information given by the premier and essentially their sound bites. And frankly, politically, what we've seen in the last few years is that if you present yourself as a tough guy, you will win elections. You will win votes. That's exactly what happened with Mark Carney and now with Doug Ford. Unfortunately, that's one thing. 2, well, I mean, if you're a CEO of any company, any food company out there, outside of Canada, looking at investing in Canada, looking at a premier bashing a brand almost daily these days, would you want to invest in Canada? Not just Ontario, Canada, if you actually run the risk of making a decision that would actually upset some politicians? I
give you a caveat on that. I give you a caveat. I would say if you're an alcohol manufacturer, because he controls the means of distribution. But if you are a ice cream maker or any other maker, the province has little control over how you distribute the product.
This is the other thing that I've actually raised with some reporters this week. I mean, bans are authoritarian. They're anti-democratic. If you don't let consumers decide for themselves and you allow the government to decide, now the anti-American movement in March and April, well, it went and people accepted it, and we learned that in Quebec, the ban itself, because it is a ban, not a boycott, it's a ban imposed by 8 liquor boards in Canada. In Quebec, the ban itself has cost Quebec taxpayers well over $1 million now. Okay, for nothing, and inventories are bought. They've been purchased. So what do you do with $27 million worth of inventory? My guess in Ontario at the LCBO, that inventory is much, much higher. So all of these things are coming at a cost to taxpayers. And frankly, I don't think it's the right thing to do. Let consumers decide what they want to do with your brand. And so for any CEOs looking at this, you're going, wow, this is going way too far for me.
Well, I'll give you not a caveat, but I was reading in the paper, Michelle Washalishan, who's been on the podcast from the Ontario Craft Wineries, was saying, this however long this lasts, and I'm a kind of a big fan of this, whether it's $1 million in Quebec or whether it's a short-term pull of, say, in that category, American wines, it has had a lot of Canadians and a lot of Ontarians try and discover the great quality of Ontario wines. And for that alone, if let's assume all things go back to normal, which eventually they will, has been a good investment. Like you couldn't buy that kind of, like you couldn't spend $1 million or $2 million to encourage people to buy Ontario wines. This is like a broomstick and a bicycle wheel. They've tried it and many will not go back. So it's just a different way of thinking about government incentives. I agree to a point. I don't mind really what Ontario and the liquor boards are doing, but
the real question for Michelle and her crew is this: is the ban making their industry stronger?
Yes, she would say yes.
Is in terms of sales, but will it actually push people to innovate more? Will it push wineries to come up with higher quality products? To me, that's the real question. Okay,
that's good.
Because
it's a good point.
If because a ban will actually push aside more competition. If you want innovation, you need more competition. So what you're arguing, what Michelle is arguing, is that, well, with less competition, we can do much better and we can become a stronger industry. Fine, okay, show me the proof around quality and innovation. And then I would say that Michelle has a case.
Well, I'll put a last, let's put a cork in that discussion because we've beat it to death. But I would say her last point on that was the scale, the newfound scale this year has allowed the farmers to buy new equipment because they've now have more. Yep.
So if you're taking
quality.
all these extra, if you take that extra cash and do something with it, that's great. Yep. That's great. But don't waste an opportunity. And so that would be my message to the wine industry in Ontario. So if your sales are up because of what's happening, that's great. But don't waste.
Invest.
Don't waste it. Invest.
All right.
And innovate.
Well, let's move on. Let's talk about another little grape-like product, wild blueberries. So I had no idea this was going on, but New Brunswick, you sent me the article. There's just a wild blueberry disaster. A terrible crop between drought and forest fires. So this is bad. I love my wild blueberries, frozen wild blueberries, particularly in seasonal. What's going on?
There's just no water, and with wild blueberries, you can't irrigate your way out of a problem. That's the thing. So the wine industry in Nova Scotia is still doing very well, despite the fact that there's been no rain, because they can actually irrigate. They can splash water on their vines, but not wild blueberries. So yeah, production is, according to the New Brunswick Wild Blueberry Association, production is down 70%. 70.
Wow.
It's a lot. And so the entire Atlantic, and he believes it's the same scenario for the entire Atlantic region, with the exception of Newfoundland, because they did get a lot of moisture. But still, wild blueberries are very Canadian. We do export a lot of it, and processors are looking for that product to make all sorts of products, whether it's pies or juice or anything. So when you actually force companies to go to Mexico, Peru, or other places, you tend to lose contracts, and it's hard to get them back. And so it's devastating what's going on with the blueberry sector. And I wanted to mention it on this show, essentially because, we often hear about bad stories in agriculture, but this one is really bad. Like, it's really up there bad this year. And of course, a lot of people have actually taken advantage of the nice weather in the summer and the fall, but all of that nice weather comes at a cost for our farmers, unfortunately.
All right. Well, let's wish them better days. I love my wild blueberries, so let's wish them better days for sure.
You'll still have some, but they may actually not come from Canada.
Right. Well, let's hopefully it's a seasonal thing, and they don't lose traction. All right. Well, let's take a break now. We're going to hear first of all from our great sponsoring friends at Caddle, which we would have a hard time bringing the show to everyone without their support. Then we're going to hear from our great guest, Trent, talk about technical analysis. And then we'll be back, and we're going to talk, when we get back, we're going to be talking about some chicanery around the Temporary Foreign Workers program that was published, coffee prices, what's going on with Trump and Carney, who knows, and then some other stuff to wrap. But first, let's hear from our friends at Caddle. Need fast, reliable Canadian shopper insights? Meet Rapid Response, Caddle's most popular survey tool. In just 5 questions, you can reach any audience in Canada, French, English, or both, with results delivered in as little as 5 business days. Whether you've got a big retailer meeting coming up or need quick, credible data to guide decisions, Rapid Response gives you expert research and a powerful Excel-based dashboard, all for just $2,500, with subscription options that can save you even more. As a listener of the Food Professor podcast, your first Rapid Response is free. Just email at insights@caddle.ca and mention the Food Professor. That's insights@caddle.ca.
All right, this week we have a special guest from Saskatchewan. His name is Trent Clarenbach from Clarenbach Research. His office publishes 2 newsletters. Those 2 newsletters are mostly known by the farming community, but I think Trent has actually done some really fascinating work over the last few years, and one particular report, or I would say 3 reports, looking at farmland value or future farmland value, caught my attention a few months ago. So I thought of reaching out to Trent and ask him to join us on the show. Welcome to the show, Trent.
Well, thank you, Sylvain. It's great to be here. I'm looking forward to the conversation.
So tell us more about yourself, what you do, and what actually got you thinking about releasing 2 regular newsletters to the farming community.
Okay, so I grew up in a small farming community near Etonia, Saskatchewan, southwest of Kindersley, half an hour from the Alberta border, right in west central Saskatchewan, just north of the South Saskatchewan River. I grew up in the 80s, of course, and it was dry, low grain prices. And from there, I went to university, studied agricultural economics in the University of Saskatchewan in Saskatoon. Decided I wanted to farm. This is in the early to mid 90s, and farmers are really just recovering and trying to get their way out of I would describe it as a financial crisis from the 1980s. So there wasn't any encouragement, but I decided I wanted to farm. Came back. I was a lease operator hauling bulk commodities with a semi as a way to keep me close to the farm and somewhat active on the farm. And I went farming full time. It'd be around 2000 or 25 years ago, maybe. Mm-hmm. And farming started to pick up a little bit there. I was with my family farm operation, farming with my father and my brother, and that didn't work out relationship-wise. So I went farming on my own. Mm-hmm. And that was interesting experience and quite a great experience. And then
Trent, say more about that. Like, what was did you discover something you didn't know, or when you say it's an interesting experience, say a bit more about that.
Well, I mean, I have a degree in agricultural economics. And when I graduated in 1994, I think the strong argument could be made there was no economics in agriculture. And that started to improve in the 2000s, but we had some droughts in 2002, 2004 that were quite devastating. And back then, so I was farming on my own. So I was undercapitalized, had a little bit of equity, and I had even less cash. And I had to get all new. I didn't get new farm equipment, but I was basically a first generation farmer because I didn't have the previous generation's farming operation to integrate into my own or integrate into that one. I had to get all my own equipment. So at that time, just throw some numbers out there, the cash budget on my farm was $120 to $140 an acre, which is like a land rent now, right? But that's gives you an idea what the economics are like. And crop insurance, if you got a crop insurance claim, you were guaranteed a loss, which really hasn't been the case in recent years for a lot of jurisdictions in Saskatchewan. So it was quite a struggle. I had a large farming operation. The Canadian Wheat Board was still involved then. So there was real restrictions on when you can sell your grain, who you can sell your grain to, and ultimately really restricted you on when you could generate cash flow for your farming operation. Mm-hmm. And it wasn't.
So just for our listeners who don't know what the Wheat Board is, it was a single desk model that ran up until 2012, and so farmers were forced to sell to the board, so the board can actually find a market for both barley and wheat. So just so our listeners know what the Wheat Board is all about.
Yeah, so you had to sell your grain to the board essentially and deliver it to different elevators across the prairies.
Basically, so you've started your farm on your own, basically, and throughout the years. So you're doing well now. we're now in 2025, many years later. Any regrets so far?
I only lost money 2 years farming, but the 1 year was a couple $100,000.
Yikes. Okay.
And I decided if I get out now, there's a possibility I can pay back my unsecured creditors. Right. And that was important to me because I wanted to hold my head high, walk down the street, not have to cross the street, and ultimately leave the area. So what I did is I liquidated my position and was able to make whole on my commitments on the people that put trust and had faith in me. I was able to honor those commitments. So that's great. I left the industry, went environmental consulting, had the opportunity to buy the small consulting firm, did that, grew it into, I was pretty proud of what I grew that into, did an exit on that. And then I was looking to replace some income in the stock market's always intrigued me, and my oldest son introduced me to technical analysis, and he quit university to day trade. And
wow. How old is he now?
Well, he's 31 and he still trades a bit, but he's got a digital marketing agency and stuff. He's doing quite well out in BC. But yeah, he introduced me to that. And so you can imagine with an ag ec degree, you study all your supplies and your demand dispositions and gather all this information, and then to have someone tell you that, you just need to look at the lines on a chart, look where the price is going, and use lines on a chart to help you get analysis of where the price is going, where it's come from, or where it's going in the future. And that was, for me, that was a leap. But
and over the years, you've decided to go into the field of research, and you've produced some really intriguing reports on farmland value, and this is where I want our conversation to go here, because you were gracious enough to send me 3 reports, 3 analysis on farmland value in Alberta, Saskatchewan, and Iowa, and it was reported by some newspapers. I think the Western Producer is one of them, but you actually applied a technical analysis on farmland value. Tell us more about the methodology and why you did this, because it's kind of unique, and of course results were also equally intriguing.
Yeah, I'll maybe start with why I felt it's effective. So when you start looking at charts and you see how assets trend and how the price movements, the prices across all asset classes will move in the same manner. So you take a price chart of General Electric, a 50-year General Electric chart, and overlay that with a Bitcoin chart, look very similar. Overlay that with canola, overlay that with corn, overlay that with Forex, Canadian dollar. You realize that all these asset classes move the same way. So then I took that idea, and it was a bit of a lark, but I had strong belief and strong convictions in the research or in technical analysis, and I started publishing it in special crops. So I introduced technical analysis to special crops, like to the world. So people had special crops price charts, but I'm not aware of anyone applying any sort of lower high-level technical analysis to it. But what I discovered is, even though no one's doing this, the price chart of canary seed and the price chart of large green lentils and the price chart of yellow peas and the price chart of red lentils, they move in the same manner. They look very similar to a 50-year General Electric chart or a Bitcoin chart or a S&P 500 chart. So the idea is the asset may be different, but the one common denominator in all these markets is us human beings. And our behavior has not changed since, maybe caveman days, maybe since our existence. We want something that makes us feel good, less of what we feel bad. If we're making money, if we're making gains, we want more of it. If we're making losses, we want less of it. So technical analysis is, in my opinion, a study of the psychology of the market. And it's really interesting. So I took that principle, And I had this idea for a couple of years, and I started doing the research and applying the data, and I kept putting it off. And then my friend Kevin Gunn, a farmer from Tyner, Saskatchewan, called me up one day. Have you looked at farmland values? I said, I have. Well, it looks like a Elliott wave. We're in the fifth wave of an Elliott wave pattern here. And
right.
So then I started digging into it, and I focused on Saskatchewan. Number one is that's where, it's the largest farmland base in the country, and it's where I live. And it's also, in my opinion, probably the most pure of the farmland and agriculture markets, meaning we don't have the population our neighboring provinces have. We don't have other industries that are...
Urbanization wouldn't have impact or skew farmland evaluations, I suppose.
Yeah, exactly. And I look at Alberta, our neighbor to the west of us, as an example, and I see Edmonton, I see Calgary, I see the number 2 corridor. Those land values are through the roof, in large part to the population base that's there.
Yeah.
So this analysis, and I guess this is what one of the things that brought us here today is you show farmland in Alberta, Saskatchewan is overbought, that from a technical analysis perspective. Now, what does that mean to the farmers, the lenders, and the investors on the ground when you put out a report like that, or how should they digest that?
Okay, so you'll see my reference to being overbought, and there's quotations around that term. And what is the question? Like, how do you know something's overbought? And that's really a difficult question to answer, in my opinion. But in the stock market and in the markets, when something's considered overbought, dollars to donuts, they're referencing the relative strength index. And that is, it's a momentum indicator that measures the speed and magnitude of a recent price change, for example. So when that's above 70 or 70 rating, then a lot of people will say it's an overbought territory. The asset's overbought. Now, I always use quotations around that term because it's
a bit subjective, right? It's a bit
subjective. It can be overbought or oversold for an awful long time. Right. It can be overbought and still go higher, and oversold and still go lower. So it's subjective, yeah.
Now, your RSI reading, as you just explained, high is in the 70s. Now, you said it was in the 95s, which seems like a pretty extreme number. Now, we've seen these kind of cycles before in the 70s and 80s. Are we about to enter some kind of correction phase? I mean, there's so many external variables, right? We've got China cracking down on Canada from canola. Is this all kind of factor into your analysis? Does it feel like the 70s or 80s? Are we getting set for a correction? Is it external forces forcing that? And what's your thoughts on that?
Mark Twain or Einstein said that history doesn't repeat, but it rhymes. Like, farmland feels quite extended from the economics of it. When you talk to a lot of people, a lot of farmers I talk to, some of them are still buying, but their price kind of almost feels like it's higher than it should be. So when you look at these indicators, for example, the RSI is just only one indicator. You really need to use these indicators in combination with other ones. So, that example I gave on Saskatchewan has a trend line that connects the high of 1922, the high of 1981. We're at that trend line right now. So it's suggesting that it's an area of interest to me. It's a caution flag. It's a lot of reasons why you want to be cautious at this level. And if we want to talk about fundamentals, I've had a number of conversations with people, and I published a video on YouTube about the catalysts that I've identified that could trigger decline in the farmland values, and there's a series of catalysts there, and you talk about interest rates, but one of the things maybe more related to like canola, for example, is talking with a farmland investor. He told me that if he used to buy an acre of farmland now, or a farm, what he's able to get on rent is half of what it would cost for him to finance that that acre of land or that quarter section of land. So the rents generate half of the cost of ownership, is what he told me. So
either rents are too low or the cost of land is too high.
Right. Yeah. So that number will diverge on one another. Now, farmland, and I studied this in university, and I was actively buying farmland to some degree and trying to buy farmland 90s and 80s, early 2000s. But farmland always sells for higher than the economic value of it.
Why is that?
If I have a quarter section of farmland and there's a quarter section adjacent to it that comes up for value, that adds efficiencies to my farm operation. It's got more value to it than the guy 10 miles away, or more value to me. Farmers are very emotional and sentimental about farmland.
Really? I did not know that trend. This is a shocker to me.
Yeah. Well, yeah. And I've really been, since I published those reports, it's certainly been highlighted.
Well, actually, I was just going to ask you, because I've been listening to you for 20 minutes or so, and we've chatted before this show, and I can't imagine how farmers have actually reacted to some of the content you've published about farmland value. Michael, this is a really sensitive issue in rural Canada, and so how are farmers reacting to your data, the reports that you've been releasing? I mean, I'm sure that they don't necessarily see this as good news.
Well, no, and it's easily dismissed, right? So, and it can be dismissed because the trend is still going higher. It's still going up and to the right on the chart. So there's been no sign of a correction in Saskatchewan yet. It's an area of interest, area of caution flag, area of concern, but following that Western producer article, I had a booth at the Ag in Motion trade show at Langham, Saskatchewan. So I had great, interesting conversations. Now, the people that were most receptive to the concept of a correction, and that land does not always go up in price, were over the age of 60 years old. And they went through the 70s. They experienced the 80s. They saw their land values drop on average in Saskatchewan 62% from 1981 to 1993.
Yikes.
They remember Farm Credit of Canada dispersing of 1.2 million acres in Saskatchewan of land that was given back or foreclosed on, or what term you want to use there.
I didn't know it was that many acres. Wow, that's a lot of land.
Yeah, one interesting video I did with Tim Hammond about farmland values. That was his first job out of university. He thought he'd be helping farmers get loans, but it was 2 years of renegotiating and with farmland and whatnot. So it was interesting interview from him. But the ones who are dismissive of the concept, least open to it, are either entered in the farmland investment field or started farming after 2007. That's my observation from talking to people.
Okay.
And 2007 was a real turning point. And there's a lot of reasons why that happened.
A couple of quick last questions for you. Like what commodity prices, yields? I mean, apparently it's been a good yield year. How much does this affect these charts? Does it affect the valuation of the farmland or the capital positioning? You know, whether it's tariffs from China or a good yield. How does this all factor in? Because year by year it's going to be different, right?
Well, I mean, I believe farmland values and asset prices are driven by a combination of fundamentals and animal spirits. So what degree of each is difficult to measure. Now, price and profits have been extremely historically high, I would say, since 2007, 2010 in farming. So that's been driving prices. So I had an interview with Eugene Ritzik, the curler, and he talked about how he bought land in 1976. And 30 years later, got it reevaluated, and it had gone up 10% in value, from $50,000 to $55,000 in that quarter section. And then it's probably gone up 8 or 10 times that since 2000 and 2006, right? So, but profits have been off the charts, in my opinion, in my experience. Yields have gone up 50%, my back of the envelope math. There's a commodity boom. I mean, it's viewed as a low risk investment. Now, the rate of return isn't great as an investor. You're looking at somewhere around 2% maybe on Saskatchewan farmland if you were to buy it. But the money is made on the asset appreciation. But you have insurance programs, you have different programs in place that kind of guarantee maybe someone's going to be renting your land the next year. You buy a commercial building, it might sit empty for years, right? But someone will always rent that land from you. And I think there's reason. Some of these insurance programs really take a lot of the risk out of the investment.
Well, what do you say to investors saying, you can't really create farmland. It will only go up in value. It's like buying, cartage land right next to water. It will only increase in value because scarcity is an economic factor. So what do you say to those people that would actually claim that?
Well, my parents' generation heard that, that message was given in the 70s and the early 80s. And they're right. They don't make more farmland. There's probably less this year than last year, maybe. I'm not sure, in the world. They got that message in the 70s, and there was quite an appreciation in farmland values. And then from 1981 to 1993 in Saskatchewan, and basically North America, farmland values dropped over 60% in value, in the inflation-adjusted value of farmland, right? So 60%. Okay, so if you bought and it took 33 years for the land to get back to that level of purchasing power and priced in real dollars. So 33 years. So historically land has gone up dramatically, but not on a straight line. So if you bought in 1981, there's a lot of people who weren't farming by 1993 because they bought in 1981.
Mm-hmm. I'm sure you're an incredibly popular guy at farming in farming communities and at farming events. But I do think that this is the kind of debates that we need to have with data, because what's solid about your approach is that you actually provide data and sound analysis. And I certainly encourage people to actually look up Clarenbach research. I suppose, are your reports available somewhere?
Yeah, so I have a subscription service, but there's evidence of my analysis for the public on my YouTube channel. I give farmers a free month trial to explore my work. The whole premise for my analysis is I help people get prepared for future price action. So basically,
absolutely.
So an example is whether it's red.
You're trying to properly inform them so they can actually make decent decisions for themselves.
So what happens is the price will drop, and the brokers and the grain buyers and the advisors and the analysts, their phones get lit up. Hey, how can the price drop? Well, my whole intention is to, above this level, we're bullish. But if the price drops below this level, this is a sell signal we want to get out. So that it takes some of the uncertainty out of the grain marketing. So I believe the news follows the price. So the price will tell us what the news will be. And so I believe that. And the whole idea with my farmland report isn't to dispel doom and gloom on the industry, but I know a lot of guys who bought in the 80s, early 80s, late 70s, and they
didn't work out for them.
Lost some of that land, went through some horrible times.
And they wish they would have. They wish they would have actually read your report back then.
Well, There's more information now.
Sounds like Back to the Future,
Yeah. Would I sell farmland right now? You have to know your time frames, but I'm not getting any. It's a level of interest to me. Would I hold it? Probably hold it for more information.
Okay.
And I'm a trend follower, so I want to ride that trend higher. But when the trend changes, and so one indicator that's proved to be quite useful is the 2-year exponential moving average, right? So we're 4%. Saskatchewan last year was 4% above that average. But if we start breaking below that moving average, then the red flags start getting raised and the red lights start flashing, and then that's likely a sell signal at that time. So I want to prepare people for this. I want to prepare people that land assets don't always go up, and they will over time. But if you had to wait, you bought in 1981 and waited 33 years for that price of land to get back, like that's a long time.
It's a long time. Now, Trent, you said you had a YouTube site. Is it your name on YouTube? Or is there a different brand to it on YouTube? Just so folks.
It's Clarenbach Research.
Okay, we'll put a link to that in the show. I have my podcast, the Trent Clarenbach podcast, and we're what I do there. I don't really talk a little bit of markets on there, but I'm interested in the human stories, and that's where maybe hereafter we can talk about Sylvain coming on, and we can learn more about him and his past and history. Yeah.
So.
Well,
absolutely,
he's an interesting cat. Take it from me. Listen,
I hear that. I hear that. We have a mutual friend, and I keep hearing that. So.
On Friday, actually, I went to meetings in Ottawa with some public servants, and the first thing, so during my second meeting, before we sat down, a public servant told me, "Well, I've been told it's dangerous to meet with you, Dr. Charlebois, because you've criticized the government in Ag Canada quite several times." And I said, "Well, that's kind of my job."
Yeah.
Wow.
Yeah.
Yeah.
Last I checked, we don't live in Russia, so I think it's okay.
Exactly.
Listen, Trent, it's been a real treat. I thank you for sharing your background in actually being a farmer, because I think it lends a lot of credibility to your technical analysis. Like, I think for the listeners thinking you were a pure technical analysis without the background and personal firsthand experience, I think it adds a lot to a lot of insight and a lot of context to the analysis you do. So listen, thanks for joining Sylvain and I on the Food Professor podcast. We'll put links in the show notes to all that stuff, your podcast, your YouTube page, and we wish you a great rest of your day, and we'll see you around the trade shows.
Well, it's my pleasure. This has been great. Thank you very much.
All right, we're back. So I found this list. There was a Toronto Star article, and in the Toronto Star article was an actual government published list of all the fines by company out to anyone who had sinned hiring temporary foreign workers. Now, some of that looked to be very technical stuff. The permits weren't in place. Some were like big fines. I saw some pretty big fines in there. You said you did your analysis and you found out. I was curious what kind of percentage were in the food, ag, or restaurant industry. What did you find out?
Yeah, so actually, you forwarded me the list many days ago, and I thought it was really good information, and actually went through that list through the eyes of a food professor, of course, looking at food companies. And since July, almost 40% of companies that were fined or that were found non-compliant to rules related to the temporary foreign worker program, 40% were actually food companies, whether it's at farm gate, farmers, processors, restaurants. Some of them are pretty well known, like Subway, for example, some Subway stores. So yeah, it's a mess. And most outlets that were fined, it's because they just didn't have the paperwork. And to me, it made a whole lot of sense, because the food industry is known not to have all the proper paperwork. And so were they delinquent because of other things, or was this like a warning? Because typically when you don't have the paperwork, you tend to get a smaller fine. Some of them actually got a hefty fine. The largest fine was actually was given to a oyster farm worth $1 million, $1 million. And there were a lot of infractions. For example, hiring people that weren't qualified. And I think there were 5 or 6 criteria that they actually listed to justify the fine. So, I mean, I'm not surprised that the food industry is being targeted, because I've always believed that this program needed to change a little bit.
Well, it's interesting because it happened the same week that the Globe and Mail, in their report on Business Magazine, put out a great article on the benefits of it, and they called out a couple of farmers, some of which were in Ontario, north of Toronto, that had that had people who work for them for literally decades. These people were Mexico or wherever, South America, and they were actually building homes and lives, Jamaica. And I came away thinking great things after that article, and then it was funny that the journalist tried to do the job and was like, "Oh my God!" After 10 minutes, I'm like done. And these people, these people are the backbone.
I mean, I would say if you want to make the program better, I'm not. I disagree with Pierre Poilievre. I wouldn't scrap it because it's actually needed in the industry. But I would change one thing. If there's one thing I would change, it would be this dependency of workers on the employer. Because once you actually get into the country, you can only work for one company.
Right.
And that gives a lot of power to employers. And so I would probably give a bit of a grace period, like I would give a 2-year time frame for people to actually have these workers come into Canada. And then after that, workers should have more freedom in choosing where they want to work. And that would lead to, I would say, less abuse. But frankly, when you look at the list of companies that were fined, some of them are really bad apples. So I would certainly encourage the government to continue to inspect and verify, making sure that these companies are in compliance.
Well, let's talk about the price of coffee here. Tim Hortons made an announcement. They made 2 announcements. I don't know if you saw it. They're opening up a retail store in the Eaton Center to sell Tim Hortons swag. They're getting into retail stores, but they also announced a fairly modest increase in the cost of coffee. I mean, it wasn't earth-shattering, but I guess you thought, and it highlighted probably, I think you said long overdue, but talk about, and we're going to be talking about coffee very, very soon at the Coffee Association of Canada's conference coming up, but talk about coffee and what your impression was of the Tim Hortons raise.
Well, I sent you a graph this morning showing you exactly what the cost of a cup of coffee is now compared to other chains. And so the benchmark right now is the $1 cup of coffee at McDonald's. That's a small version. And of course, with medium and large, Tim Hortons remains the cheapest option out there. And people are not talking about this, but medium and large, Tim Hortons is the cheapest option. And so when I saw I don't know what your thoughts are, but when I saw the 3%, I was actually expecting more like 10 cents or 25 cents, not 3 cents, because typically that's what we get. I do think that Tim Hortons wanted to increase prices, but they wanted to remain competitive because there is pressure out there for 2 reasons. There's McDonald's, the McDonald factor, and of course demographics. People are very careful with their food money right now.
Well, and I went by my local Starbucks and it's closed. So in the coffee category, Starbucks, they had a what looked to me to be a pretty busy Starbucks in an area with a Walmart and a Costco and a beer store and an LCBO.
Right.
And literally overnight, pretty much it was wallpapered up. So there's been a raft of closures from Starbucks as they try to reboot and they try to relaunch themselves.
Well, it's the battle of the third place, eh? So I think we talked about this before. I mean, people are going back to work physically, and they're still, like right now, everything's in flux with the third place between home and the office. And so people are discovering new places. And frankly, there are a lot of independent shops out there that are doing a pretty good job welcoming you, allowing you to sit down. You don't have to go. You don't have to buy something, go to the washroom. You feel more welcome in general, and which is kind of the opposite of what we've seen from Starbucks in recent years. And so I do think that there's a lot of that going on, that people are, it's being renegotiated right now.
Interesting. Yeah, we did talk about it. It's interesting perspectives. Speaking of interesting perspectives, our prime minister was in America suddenly this week, chumming it up with Trump.
Yeah.
He's going to America, but don't expect much. Now, you thought that, out of this chumminess still for the SM5 dairies, the target. Now, you say you seem to read more into this meeting. I didn't get anything out of it, but where did you get that read that they were talking about dairy?
Well, I mean, for the SM5, I've always thought, Donald Trump is going to be aiming at the SM5. I mean, all 5 sectors within supply management. And of course, dairy has received a lot more attention. But I think for the first time, I saw President Trump saying, I'm going after dairy. Dairy is clearly the target. So it was really the first time in many years since he started his first term, really in 2016, that we heard President Trump saying that he's after dairy. I still don't think he understands the system at all. I don't think he cares, but he's hearing it from his base, his lobby groups representing dairy in America. And so he knows he can deliver because, I mean, based on what you saw this week in Washington, I mean, we've actually given a lot to President Trump without any concessions coming from them. So my guess is that for him to get a concession on dairy is within reach. And so I think yesterday was more of a win for Donald Trump against our own dairy farmers. So and a few weeks ago, we talked about this last week, there was this weather balloon that was actually communicated by the Globe and Mail saying, well, Ottawa is considering conceding and allowing more products coming into Canada. Well, basically, my theory is that Ottawa is just trying to figure out how much this is going to cost again, because the first time around it was $1.7 billion. Jeez. Will it be more or less? That's really the question right now.
Well, I guess the good news, I should say, coming out of the meeting is apparently we're going to be friends again with the Americans, according to Trump. So I guess we have that.
I know there's yes, absolutely. I think for a while, from I'd say May to July, no one was talking. And that, when it comes to diplomacy, that's not good. So I know there's a lot of criticism out there these days about Carney going to Washington, coming back with nothing. But at least they're talking. Yeah. I mean, they're talking.
Yeah, I agree. I agree. Yeah.
And ministers are actually there working away. And so I'm hoping that we'll actually get something out of it. But it's important that we actually keep open channels between the 3 nations occupying North America.
Listen, I guess a W for us is not having a childish meme posted right after the meeting. So I guess that's a W from with the Americans these days. I don't know if you saw the Grim Reaper stuff that's going around.
I know.
It's just crazy. Last but not least, I don't know if you knew this, but Costco got in, one big grocer, of course, got into selling gold bars in a huge way. They became a huge seller of gold. And anybody who had bought, huge, like they were selling gold, 1 ounce gold from Switzerland or Canada. And they couldn't keep it in stock. People were buying gold. And interestingly, gold hit, $4,000, like a big, huge amount.
Yeah,
that
a record.
Points to uncertainty. And now, do you see any impact on ag or the food industry in one of these kind of secure, fealty kind of things? Like any connection we can make there? Or is this kind of just 2 random spurious pieces of information?
Yeah, well, I was curious. And again, I sent you a chart showing you the price of gold since 1980. And food inflation in Canada since 1980. And of course, both do fluctuate. But now, of course, if you look at the price of gold since 2010, it's skyrocketed. Now it's at $4,000 US an ounce. It's incredible. But I was asked a question, gold prices, do they impact ag markets, ag commodities, and of course, inflation? Trying to figure out if there's a correlation between the two, and there's basically none. There's none.
No?
Both
Okay.
are impacted by different factors. Of course, gold is mainly impacted by monetary policy, whereas, of course, food inflation is impacted by, well, climate change, geopolitics,
Sure.
impacted by all sorts of things that may or may not be under the purview of governments or economically, of course. But there's just no correlation at all. But I thought of looking into it to see whether or not there's a correlation.
Yeah.
But even with wheat, I mean, I think wheat is probably the biggest one because wheat represents 20% of all calories consumed on Earth. If wheat goes up, that correlation is incredibly strong. So there are some commodities out there that will influence the ag sector, but gold is just not one of them. I think it's just an indicator of uncertainty. A lot of people feel nervous with policy and the government shutdown right now. I think that's driving the price of gold right now. Mm-hmm. And I do think that's really what's behind the rally that we're seeing. And of course, the government shutdown will impact the price of food indirectly or directly, perhaps if it lasts a long time. So I'm thinking about inspections. I'm thinking about the border, thinking about a bunch of things that actually can, exactly, the movement of goods. So that's certainly something that we're keeping a close eye on.
Well, all right. Just a reminder to the listeners, there's gold in them. They're Costco aisles. They've made buying gold very accessible. So, if you feel like you want to jump on the bandwagon at the top of the cycle, buy high, sell low. Time to buy some gold, apparently.
Yeah.
All right.
People are buying high for sure.
Yeah. Well, not unlike the cannabis market, but there you go. Boom, boom.
Yes.
I saw Chris last night, great cannabis retailer in Cannabis Express in New Brunswick, by the way. He says hello, and great retailer.
Oh, yeah.
All right, well, that's a wrap on this episode. Another great episode. We'll be back next week, of course, with more great interviews. I'm Michael LeBlanc, consumer growth advocate, media entrepreneur, and you are?
I'm the food professor, Sylvain Charlebois.
Safe travels, everybody.
Take care.